following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Got a new headset, so I hope the crickets are gone. That's what I'm hearing. So maybe you guys are spared from the down-home farm kind of sounds that have been going through this microphone. How about that Elton John that was playing right before I came on? That brings back memories. My older sister used to drill that into me in the early 70s when I was growing up, along with Lou Reed, the Beatles, the Stones, of course. Man, what a great time for music. I was just a little too young to totally appreciate it. But we're going to take a look at the dollar. 96.11. Remember, guys, 96.11 is the big number down below. We talked about that was the buy point on the dollar. We're still going to stand by that on the long term. Still think the dollar can rally significantly from here. Here's the weekly. And what the problem is right now for it is we've kind of gotten up into the top of the hill, remember. On wide profiles, this POC 96, 70, 71 is going to kind of be a rocker arm. You kind of fall down one side or the other of the hill. And this is the peak of the hill, the peak of not the peak of distribution, but the point of control. So getting past there is going to be pretty significant, and I'm not that concerned about it. I'm still kind of looking at it a little bit more longer termish. Intermediate stops below 96.11, long-term stops below 95.30, and just trying to stick with the plan there. I'm trying not to look at it, actually, because the more I look at things, the more, probably like you do, the more they're on your screen and the more little crazy little techniques and new indicators you develop in your head to try to get in or get out of something. So I'm just it's off the grid, trying to leave it alone, let a fine wine breathe, that type of scenario. Let's jump right into the S&P futures. This kind of, if I can say the word pissed me off on Friday. I was feeling really, really good and rosy about this. It kind of went a little bit too farther beyond the 2085.50. It caught a pretty good move down off of this, actually. But it rallied back, and I want to show you kind of the mechanism that I'm looking at. We've got a really wide profile on our short-term 240s on the S&Ps, just to kind of give a little bit of a review. And why did I get logged out of that application? Okay. Going into our indices grid, guys need to get a demo of this. Got some really cool features added to it. S&Ps, as of Friday's close, we closed positive on all time frames on the breadth, and that was a weekly close, and that sucks for shorts. I'm telling you right now. But I'm still not convinced, even with the the situation of the breadth, and you got to pay attention to these inflection points. And I'm still a big fan of attempting to be, and again, this goes against some logic with the breadth there, but I'm still a big fan for shorts waiting patiently until we get back below 2085.50. Now, if we rattle around here a little bit, stay kind of non-directional and kind of float above this 2085.50. Remember, it's going to continue to output bars here, and the breadth stays positive. I'm going to have to look at this switching gears a little bit. Remember, as a trader, you can't just stick with something constantly. You got a long-term plan that long-term indicators kind of predicate your stance on that long-term technical view, and then you've got some intermediate and shorter term. Right now, I don't like the way the breadth is turned. I'm going to still continue to look at this as a short opportunity, waiting for some of the markets to open. Remember, these internals, it's probably best to wait. We talked about not going long or short overnight. This is another fine reason. Not a big gap this morning, but anything can happen. But if we're breadth negative and we're below 2085.50, I'm going to be looking to short this thing. If we rattle around long term here and our breath starts edging up, I'm going to get very concerned about being short. But that's kind of my fence right there. And as a trader, we're going to have to kind of switch gears and not stick with a stubborn view on things. We have to kind of be flexible. And as much as, I think there's some major issues coming down the pipe, it is what it is. And if you've taken that logical stance on treasuries the past couple of years, you definitely have been wrong continually. It is what it is. So that's the look at the S&Ps right now. Here's the look on the Shanghai. I just want to, kind of had a decent move today. Here's our daily on the Shanghai. Targets up top, 41.19 on this right now. And that coincides with that weekly POC right there. So that's going to be your stopping point, your targets on the Shanghai. I think that's actually a shorting opportunity. Still relatively bearish on this. So we kind of waited patiently to see if we could fall through 35.54. That didn't happen. Now we've got another short opportunity around 4,100 on the Shanghai. So that's kind of, you got to watch your ETFs that involve China on this one and kind of monitor the index action, if you will. Let's take a look at the 10-year. This 127.11, 127.14 is kind of holding. You're going to have some noise around these levels. We reached a low Friday of 127.06. Again, I'm looking at this also as a long-term type view, just like the dollar. I still think the market has a better chance of staying in a range or selling off than going higher, stock market that is. And I think the bonds and the notes are going to act accordingly in that kind of inverse reaction, so to speak. So, and really like the way this thing continues to make higher lows, and our navigator's really not showing any divergence price action here. So again, treasuries move higher in my opinion. Here's the situation on gold. I've been a fan of trying to short this product, trying to find leverage points, either with the fall through below 2081. Again, let me make sure we are December contract here. Let me look at something really quick. Hold on. Okay. I thought, this is one of the things that I need to alert you to. We talked about gold last week. And the orange bar, the new profile attempting to appear, we've got this 1125 now. So as we go into the scanner and we go into the futures section and we go into gold, it's not showing yet because remember we have to have an E-signal kind of flip over at the beginning of the week. But we've got to pay attention. We had this orange peel back happening. E-signal just hasn't adjusted yet. This is our data that we're looking at. So right now, let me make sure this is the case. We've got to take a look at a new profile that attempted to appear last week and new inflection points in force that are 1125 and 1186 down below. So 1125 is going to be your leverage point on gold right now on the short side. And I'm actually going to look into our e-signal data and try to figure out what's going on there for that product in particular. As we go down the line, soybeans, again, new crop beans rallied just a little bit here. This is off our 910 area. I like the way that it's not bouncing tremendously here. Still looking to short below 910. Here's our 240s. We had that 923.5 last week. Now we've kind of got a new box that's pinched in a little bit. I'm just looking at this as a short-term view, hoping that we get a new daily profile up here to get some more short leverage points here and be able to race this past 910 in general. Crude oil, oof, ouch, ugly situation. But again, long-term, here's the argument that we made last week still holds, even though we don't have any new profiles attempting to appear down here. The argument still holds. Going back in time, looking at the action of the XLE stocks relative to crude oil, I still think we could have a turn here. Here's our weekly view. Again, we predicated this. If you weren't watching the show, When crude oil started turning here, we actually had lower lows on crude oil in the contract we were looking at back then in March relative to the XLE. But we've rallied. The XLE kind of led that move up. The XLE may be leading this move up here, so we've got to watch out. I don't think it's the time to get short. I think it's the time to stay away from shorts on crude oil right now, even though everybody and their brother is talking about crude oil going lower, which I kind of like for this particular trade. Here's the XLE kind of crowding the technical damage on the north side here, and that unfair high around 69.41 on the XLE. If we build, as Tom would say, build some KAs here and kind of consolidate around these unfair highs, that may be another leg up that we're going to take here. I personally like this trade, and I like crude oil to get some reasons on the scanner, some new leverage points to start looking at nibbling on the long side, actually. And I don't usually go against. But we're going to talk about that in just a minute when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And what we're going to take a look at here is the DAX. Not doing that good, but what we want to focus on here, again, we don't have a lot of look back here. 11,439 on the long term. If you can stomach a rally that hard on the DAX and still stay in it, I will send you a trophy. But on the shorter term, on the intermediate term, this is where we're at. Let's look at the 240 here. This is really the type of action you want to see as we look at something to consolidate, just kind of like the Bill Cos thing. You got stops short term above 11,103, and looks like we're going to have another run on the downside here on the DAX. So the leverage point on the bottom, 10,946. That's what you need to pay attention to on the DAX. Any breakdowns below there and any closes on a daily below there are going to be pretty significant for that instrument. Let's see. We were, kind of referencing the XLE a while ago. I just wanted to kind of finish what we were talking about. Excuse me. At the same time, we've got this orange bar attempting, new profile attempting to appear. That's going to be in the scanner. It's actually showing itself. And let me show you that really quick. Current profile, long-term, and let me just check here. Hold on, 57.33, 57.63. Yeah. Oh, man, Jesus. I'm looking at the wrong thing. Hold on. So many things on this scanner I can't keep. There's the XLE. Hold on. That's not what I wanted to do. Guys, I'm confused. Hold on. Let me just search for something here. There it is. That's what I wanted to show you. So we see this orange peel back, which is more than likely going to jump into force pretty quickly here now. That's somewhat of a signal in itself, and apologize for taking that long to find an instrument in my own product. But this yellow peel back means that we're going to have a new demand area. These are all supporting things for the XLE, which is why I'm thinking that crude oil's got a chance to turn around here. And by the way, going back to gold, I just want to apologize. One of our tech guys had put in August gold this morning. And this is the only thing. Where are we at here? Gold. He put in August gold. I think we need to have December gold. So we're going to change that in a matter of minutes, I hope, and get the inflection points that I was looking at on December gold. And if you guys want to see a month, we can put in different months. So we could track August gold and December gold at the same time. Just send me an email, send our website an email, send TFNN an email, and we'll try to get in what you want to see. We're trying to, amalgamate some more ETFs right now. We've had a lot of emails about that, and I'm looking for, help with that. So anytime you guys want to send something in when it involves putting new products or new instruments up, I'm all in on that. Let's take a look at the yen trade. Still, again, you guys watch this show, I love this trade. Nothing really different to talk about here. Still a flat out long, and we talked about long-term stops being below 123.68 now. I think that's still the case. We've kind of edged up off of that 123.39, I believe it was. So now we've got stops a little bit higher, and the stops are a little bit higher based on inflection points that we're paying attention to here in the scanner. So I'm going to go to 4X section. And there we are. And there is the 123.68 as I mouse over. Here's the level of the market. I think this thing's getting ready to pop again and go north. I have certain reasons to think that. Here's the ruble trade we've been banging the desk about since that area right there, 53.12. Nothing really standing in the way on this one. Eddie called this one very well, kind of gave us a little fundamental insight on the interest rate horror show that's going on over there. And really no reason to take this thing off at this stage. And now we're busting out again above profiles. We talked about don't short this. Try to find support areas on the way out. And that was 1,400 pips ago. Zero reasons to get out of this trade. I know you guys are trading the ruble. We're going to be right back. We're going to talk about the euro and hit some stocks here really quick, guys, that might be on the radar screen for today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Somebody made a comment, and I should have been talking about this already. It was really a something nice to bring up, actually. Talking about a different way to look at the S&Ps and some shorter term time frames. One of the things I'm kind of getting a little irritated that we've been bouncing around this 2085.50 and just there's shorter term time frames that we can pay attention to, i.e. the 240s to trying to get some more leverage points here. We've been trying, and we're trading 2081 pre-market here, and our breadth indicators are getting ready to start kind of coming into action because the market's opening. There's the DAX. In my opinion, trading the outright, the underlying instrument, you still got to use that 2085.50. And we've had some good moves. I mean, we've been able to use that. Unfortunately, it's been a stop out situation. And here's the long-term view without question. This 2060 is kind of Custer's last stance for this, especially on a closing basis. So, how do you really kind of hang in there and kind of mitigate all the crap that happens with these, taking a short stance? One good way to do it, which is real simple, and you probably, if you're trading futures, you probably have access to this. Let me get my correct Skype up here. No problem, Larry, no problem. Continue to do what you need to. You probably got access to options, and a lot of people look at options like buying lottery tickets, and there's whole strategies kind of based on the red 22 roulette wheel type. It's going to hit there every once in a while. But one of the real cool ways to trade the S&Ps, in my opinion, because the volatility, you get stopped out, it's nerve-wracking, is really to look at it from taking a short stance. Let's just kind of throw one concept out there. And, when you buy hedges, a lot of times you're going to pay for that insurance, time decay, implied volatility, all that. You guys know the drill there. If you don't know it, just watch some of the archive option webinars that have happened on TFNN. But omitting all that, just putting a simple strategy on and not trying to complicate it. The more you complicate an option strategy, I mean, these butterflies end up looking like pterodactyls after a while. I mean, you just kind of, I've got a friend who just likes to complicate the hell out of option strategies. One way to deal with the S&Ps, all things considered, you want to be short the S&Ps and you want unlimited upside, in my opinion. So how do you do that without actually paying for the insurance up top on the hedge and then maybe selling some puts down below and blah, blah, sell the futures, buy in the money calls. I would tell my own mother to do this. It's pretty much, I mean, you find out your levels of breakdown that you actually want to be in. Now, you're going to have a more significant move in the future to really take advantage of this. But I think at this stage, that's kind of what you're looking for. You listen to Larry, you listen to David White, you listen to Tom. I mean, and myself lately, the past, since the first of the year and even back since, we've been non-directional and I've been leaning towards the short side. So how do you take advantage of situations like that and not get shaken out of the trade? short the future, buy in the money calls. And how far do you buy in the money calls? It's based on really how, big of a move are you expecting, and why are you buying in the money calls? Because, and a lot of people don't trade futures against options. I mean, they trade options against options, and this is just a real simple, and your broker's going to love you because you're not going to get taken out of the game, and he's going to have you as a customer forever. And you're going to be able to kind of limit your margin required for trades like this. So, for instance, you're short in the future, whatever, 20.85.50, and let's just say you look at the stack of options, and I can pull these up. In my opinion, you're looking, okay, how much do you want to devote to insurance? 5 points, 7 points, 10 points. And what does that mean? That means that if you short the future and you're buying in the money calls, you can obviously do the math. What's the intrinsic value of the call? So let's just throw a scenario out. In fact, let me pull the let's up. That would probably be the smartest thing in the world. And here we go. Okay, so let's see if we can detach this. You know what? I'm not that smart today. Let's do this. Okay. Let's look at, let me see what the date is. Sorry, I don't have this planned out. And here we go. Yeah, let's look at September options. All right, and let's look at the S&Ps, and we're kind of getting to the crux of my argument in just a second. All right, so here we go, and here we are. Where are we trading right now? 2080. Okay, so here we go. So here's September 2075s, and let me just tell you when these expire. Blah, blah, blah. September 18th. Is that triple witching? I think it is. All right. Okay. So, all right. So we're looking at bid offer. So bid offer 30, let's just call it 31.32 on the 2080s. On the, is that the, hold on, guys. Okay, anyway, we're at the money 32, let's just call it 32.33, and then we've got 31.32 on the put side. Let me just check something really quick. All right. Okay. So let's just say we go down into the calls, and we go down the stack here, and we go down into 2070, 2065. All right, let's just look at 2065. So we're 15 points away from the money, and you've got, what is this? Why can't I do my math right now? 25. What's 28? Okay, that's 15 points. All right, so let's just go to 2060. That's 20 points. So you've got some options that have some fat on them. Let me see here. All right, so it looks like we've got about 20 points of non-intrinsic value in these things. So what does that mean? That means between now and September 18th, if we put an in-the-money call hedge on, the good news is the S&Ps go up, and then your calls are going to protect. Excuse me, if the S&Ps go against you on the short side, and your calls are going to protect you, obviously, if you own calls. All right, you're short the future, long calls. The deeper in the money you go to buy the hedge, the more high delta it is, and therefore the more tick for tick that the calls are going to protect you. Now, if you go up to, S&P 3000, they're going to pretty much go to all intrinsic value, and you're going to lose 20 points, right? But I think the good news is if we bounce around between 2100, even higher, your calls are going to still, protect you pretty much almost tick for tick, keep the extra fat value for buying the insurance, Because remember, if the calls are, out of the money, for instance, like if you buy the 2100s, they're not going to protect you as much. All right, so the S&Ps are going to go up 10 points. These calls are going to go up only in value maybe 3. All right, or maybe 2. Actually, if the S&Ps go up 20 points, let's see, they're going to be at 32. So if the S&Ps go up 20, in this case, the calls are only going to go up 10 to protect you, so you're going to lose 10 points. Contrarily, if we have the S&P, if you own the 2065s or the 2060s, they're going to protect you more. The S&Ps go against you 10 points, then the calls are going to protect you 8 of those points. So you're looking at a 2-point, very boring, painless situation to own these in the money calls and still hang on to the short futures. Now, the good news is, in this type of strategy, if the S&Ps implode, guess what's going to happen to the VIX? It's more than likely going to go up. Therefore, more than likely going to affect all option pricing. So, for instance, if we cave in from 2085 or 2080, wherever we're at right now, down into the 2060, down into the 2055, your calls are going to continue to protect you, but obviously the S&Ps are going to go down faster than the calls are going down that you own. And also the VIX is going to help the situation with the calls exploding in premium. I don't know if I'm making sense right now, but again, it's a simple strategy. I don't like to complicate things when it comes to options. And if you marry these things, and I'm going to take this off the grid here, if you marry these, calls with the futures themselves, you can kind of like look at it every once in a while. You can play around with it. If you have a move that goes your way, again, and with this situation, you're looking for a larger move. But again, I think that's what we're looking at, period, right now with some of the hosts on TFNN. But if we do get a move our way and you want to kind of play around with this, guess what? Let's just say you got 10 contracts short on the futures, 10 long on the calls. If we get a good knee-jerk down in the 2060, 2050, 2040, guess what you have a free trade opportunity to do? Is start nibbling around with selling a put or two along the way. And you're trying to balance the equation because remember, the farther we go down on the S&Ps, you have premium capture opportunities with zero risk as you go down there. Now, let's just again say the S&Ps go straight up, dims the brakes, and your downside. All right, and you can dismantle that trade anytime you want to. Let's just say the S&Ps go up to 2110, 2120. Guess what? Those calls are going to continue to probably still hold. The 2065 calls you bought are more than likely going to still continue to hold some fat, and you can offset the futures and the calls anytime you want to and say, you know what? We just rallied 40 points, and I lost 6. And that ain't a bad deal. So you got to also kind of monitor this because, you've got the time decay happening, and we'll start hitting these things a little more so this week on the September 18th expirations on those particular calls. Did I belabor that point long enough? Okay, here we go. So let's take a look at something else near and dear to my heart right now. IBM. I've got to pull this one back up. Let me just read it in here really quick. Oh, Ron Paul, man, he took a shot the other day, didn't he? He's so serious sometimes. I think it's people want to be entertained. I mean, that again, you gotta massage that equation. You got to be. Larry does a great job with that, by the way. Larry Presidente is very entertaining and very, very true and smart on what he says. That's why I think people really love listening to him. Here's IBM. Unfair lows at around 155.88, 158.20, and that's what I think Ron Paul's got to kind of get hip to. And that's seemingly what who's the guy? Trump. That's kind of what he's he's heavily weighted the equation a little bit more on the entertainment side. But hey, you know what? If it ain't broke, don't fix it. 158.20 is going to be the maximum selling point and stops above on IBM. I really love how this thing is spinning down here and looking like it's going to head lower. And we don't have any long-term signs here that are causing us to think differently. As we look at, the cross of the zero line here on the short side, this is pretty significant here on the long-term navigator as we look at that. So, again, looking for IBM to take another nosedive. Tesla, we've had this one on the radar screen. The interesting, cool thing that's happened with Tesla is we talked about this 2045, 2048 area. That's that, weekly unfair low and daily unfair high. And look what happened on Friday. We just came off this one very nicely. We're trading 2056. And what's happening now is, unfortunately, this is kind of a stop-out situation. Again, volatile stocks overnight are kind of tough to stay in, but this is a clear sign. If you, again, this morning, if you got your broker and your stops in, you've got to pay attention to stuff like this. Again, these are what stops are for. So I wanted to kind of visit one that wasn't in our favor and try to figure out how we deal with something like this. Pre-market orders are always accepted. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. To answer the question, we had somebody ask about AVB, Avalon Bay Communities. I've got it up in the scanner. It just pretty much plainly states, I know there's some other indicators in the world out there that are great. Stochastics has definitely got some value to it. Talking about a stochastics kind of turn south as the stock continues to move higher. This is the way I'm looking at it relative to balanced areas. You got better shorting opportunities, in my opinion, and I know things snap back quickly sometimes off the highs, but right now I don't see any red shoots, if you will, that could give you any kind of ideas or anything to lean on. I mean, where do you put your stops in situations like this? I have no idea if you're wrong, because you're just, if the stock is kind of starting to gravitate and break the 240s and the daily unfair highs, that's another thing. 174, 174.77, 175. This is a nice little setup, and I know you're going to have to sacrifice some points that you weren't short to get there, but that's going to be the safer play. And again, I think this stock's without question been outperforming the S&Ps lately, and I just think we could be wrong on the S&Ps. The S&Ps can go higher. That's why I was talking about a call hedge, a simple call hedge that I ended up talking about unsimply for a good 12 minutes. I timed myself. Could have said that in about 30 seconds, but if the market continues to move higher, you want to, in my opinion, you want to be in stocks that are kind of showing themselves as weak pieces of crap, really. I'm going to tell you, I mean, that's kind of boring. There's no excitement in not catching the highs, and maybe you caught the high print in Netflix, and that's something to write home about. But that's a scary game. The boring game, believe it or not, is better. And I'm pulling up the weak ones. And the longer you do this, the more you want boring situations to ring the register. And there's plenty of stocks that are just not cooperating with any moves up on here. And, there's IBM, there's Hewlett Packard, there's Gap, which is just, the continual beat it to death. Level 3 communicate. I mean, these are Kohl's Corp. I mean, these are all things that, there's 3M back on the list. There's a lot of opportunities here. Let's just look at 3M. Yeah, I mean, if the S&Ps are looking, if you're thinking about the S&Ps going up, which that is a possibility. It's going to lift some of these stocks that are already kind of showing their hair long. But let's take a look at 3M again. Okay, well, wow, why didn't you tell me to short it back at 170 or something? I mean, it keeps showing its hand. You got another leverage point here. I mean, we were looking at this lately at 151.68. I mean, couldn't have a close above there. We've looked at this As soon as we started breaking down again below the weekly 156.21, and again, you know, these are turn the rents the same way type scenarios. In my opinion, some of these multinationals are still going to continue to, I mean, they're basically predicting higher dollar. I mean, if you know, these stocks forecast, and if they, so anyway, throwing the fundamentals out, I think you got some good short opportunities here. Guys, Larry Pesavento's next. Please stay tuned. You'll be more than wiser for staying tuned TFNN all day. I'll be back again tomorrow. Have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.